Bitcoin coming off a nearly 10% down week. It fell on Friday as investors focused on a $9 billion payout from a collapsed cryptocurrency exchange. Joining us now, Andy Baehr, CoinDesk Indices head of products. Is it that's part of it, you think, Andy?
That's definitely part of it. I mean, we care about two things. We care about adoption in the long term, but we have to look at flows in the short term. So 2024 has been a sort of a two-act play. The first quarter was really a strong uptrend. We unlocked so much demand with Bitcoin spot ETFs. No one wanted to get in front of that rally. The demand worked, the market structure worked, the ETFs worked flawlessly. In Q2, that rally just fizzled. We've kind of been wandering since then, but now it's all about the supply from Mt. Gox and from the governments that have seized Bitcoin.
How long will that last?
Well, the best news is it's finite, right? A lot of this is cleanup from 10-year-old problems. And, we spent a lot of 2023 cleaning up a lot of the dirty dishes from 2022. That was successful. So the best news is there's not enough positive flows to really overcome the supply that the market sees over the next couple of months. But it's finite. And once it's done, then we're free to go up from there.
I mean, you go back 15 years and you can see pullbacks like this, even much more significant than this, again and again and again, always just to see higher highs and higher lows.
Totally agree. The finiteness, and it just can't emphasize enough, this is taking care of old business. It's finite. This isn't stuff that we would expect to return in the future. So we are in a downtrend right now. Our trend indicators have been pointing down since mid-June. So, investors who are looking short term, just look at the trends, and when they reestablish themselves, we'll be in better shape.
Can you, I mean, I don't know if I would if I were you, but can you venture a guess what the low would be? And can you venture a guess what the next high would be within the next 2 years?
Yeah, we focus more on the shape of the trends than actual price predictions. We want people to think about this as a store of value over the long term, and to really, the best thing you can do is maintain your confidence. Right now, we're in a downtrend both for Bitcoin and Ether. So this may be a time to sort of watch and keep eyes on your fiat currency. When the uptrend starts to reemerge, that's, I think, our strongest conviction about when to get back in with conviction. Because
when it was at 20 and it went to 4, how do you stay convicted?
It is hard for some, and we actually have trend products to help people kind of survive those periods, to have a sense of what's going on. But zoom out long enough, and you'll see that it's been a great asset to hold on to.
But I think it went from 65 to 17 or 15, didn't it?
We've had tremendous tests of faith in this 15-year network effect, finite supply currency. One thing I think that will help a lot of investors is breadth, right? Once we get a little bit broader, we get outside of Bitcoin, we get outside of Bitcoin and Ether, which right now make up 75% of the market cap of all crypto. And I mean, when the paint was drying on this very studio 25 years ago, the QQQ came out to help people access the top 100 names in the future of finance. So our CoinDesk 20 index helps people do the same thing with the future of crypto. That's trading overseas in the billions. There are funds here, SMAs here. So breadth and diversification will help sort of cushion the blows for some of those really faith-testing moments.
So are you looking at it as digital gold or as a functional payment mechanism for global?
Store value for Bitcoin. Ether is where stable coins, tokenization, and smart contract platforms are all going to clear. And then you have 23,000 other assets, some of which are going to do well, some of which aren't. Buy the index, get a hold of the whole asset class. The winners will find their way in there, and you can take it from there. Bitcoin will always be separate. It's the oldest, it's the purest investment case. So I think people really want to look at that separately. After that,
what percentage of gold's market cap should Bitcoin have? What within 5 years?
Think about it this way. When you look at the price of Bitcoin, look at the denominator, look at USD. So I'd rather really think about the USD part of Bitcoin over USD than comparing it to gold because
when you look at what gold's valued at, it's over USD. So it's the same.
It's
kind of
the
the
same idea. It's just I think when think about what you think about the dollar and think about what you want to replace it with. Gold in its physical form is hard to move around.
That's what I mean. Bitcoin should at least. There's no reason it shouldn't be just 10% or 20% or 30% of gold.
Right.
It should be. And, poor Senator Menendez, I mean, he's like walking around with these gold bars. It's like, whoa. I mean, if he had Bitcoin, it would have been right on his...
I think they were hidden. I don't think he was carrying them.
Oh, he wasn't actually carrying them. Or it would have been a lot easier. He'd probably still be, sailing, no problem.
That's right. And actually, cleaning up a lot of these old cases about Silk Road and Mt. Gox, I think, will help. Like, that helps just sort of cleanse us all of these kind of old sins, and we can move on with a clearer idea of Bitcoin as being a store of value. And a lot of the ETF holders, I think, feel that way. Also, diversified returns. So the whole asset class presents a lot of opportunities.
So you're a stacker, and you think people ought to keep stacking?
I think people should really consider with their advisors to add 2 to 5% of Bitcoin. And I think as more breadth becomes available, especially in the United States where breadth is hard, we're sort of in this hourglass environment where there's so much value, there's so little bandwidth, and there's so much demand. The more we can, increase the neck of that hourglass, the better for investors.